Hello, everyone, and welcome back to Sudden Wealth. I hope you're having a wonderful end of the day. If you do enjoy the content, please consider dropping that like and subscribe. Thank you very much. The channel keeps growing, and I really appreciate your support. Now, this week has been quite a bit about inflation, numbers coming up. PPI and CPI both came hotter than expected. PPI, if you will, is kind of the company inflation, and CPI is, well, people like me, a new inflation. It came out not so much higher than expected, in the sense that it was not a brutal beat, let's say. It was not, expecting a 0.2% increase, and we got a 0.8% decrease. No, nothing like that. It was a little bit hotter, which I've mentioned before. It's kind of normal when you are in this type of environment. So very rarely, if you go back to the 70s and 80s, you see that even more pronounced. There is no market in the world, crypto, oil, assets, gold, stocks, bonds, you name it. There is no event that goes like this, non-stop, and neither like this. It doesn't happen. Even in bull markets you have correction periods, even in bear markets you have up periods. It's normal, and the summer tends to be always a bit hotter in terms of inflation than the other months, because people move more, travel more, work less, and spend more. So all of these things end up being inflationary, but in any case, it was not a dramatic beat. However, it was enough to basically reverse the markets. I mean, crypto was down pretty much the entire day, but gold was very up, and it ended up going negative. Stocks were up, ended up going negative, or at least look like it. And bonds have been negative from the start, and those are the ones targeted the most. Reason is very simple: higher inflation. Oh, the Fed will raise rates again, or will keep them higher for longer. Now, I have mentioned that is very likely, or at least is the objective of the central banks, to keep rates higher for longer. Will they succeed? Well, they may succeed in the short term, meaning between 12 and 24 months. I am not so sure going forward. But if you look at the rates where they are right now, they are pretty much what is called normalized, in the sense that if you look a bit at historical periods, it's around, let's call it a normal level of interest. What we had in the previous 12 years, that was the strange part, the abnormal part. So when these central banks also come with this, oh yeah, we are targeting 2% inflation. Do you understand that we got 2% inflation? Like 10 times in 150 years. I mean, the way they talk about it seems like it's so easy to do. I mean, it's like it's happening all the time. No, that's actually not the case. So I'm convinced that some period, this 2% target will probably be increased to 3%, and it will probably, there's going to be some good explanation. When I say good, it's not necessarily a proper explanation, is more one explanation that sounds good. Something like, we need to fight for the West, we need to fight for freedom, we need to fight terror, we need to whatever the case may be, is going to have a nice name around it. The purpose is to basically, to get people comfortable with the higher inflation rates. And don't forget, because our debt is very high across all levels, one of the ways to be able to repay it is by inflating the currency. So central banks in practice, it is not great for us, but in practice what they want to do is to basically simply inflate the debt away, because they will not be raising taxes. They will not be reducing spending. So the only way they can do it is by basically, decreasing the value of the currency, which ultimately will be beneficial for crypto. So what I see at the moment is we are still in this, really boring phase. I would hope that by November, maybe December, we start to have higher moves on the crypto markets, meaning not these endless sideways up and down. Look, I mentioned before, September everyone was very bearish, October everyone was very bullish, and again, when everybody is thinking like that, that's actually not very beneficial for the price, because everyone is putting themselves on one side of the trade. But what do I see? I see the underlying metrics kind of still good, in the sense of number of active unique users, hash rate, number of new wallets being created. All of these things are actually positive, and people typically don't pay attention to them because they occur in the bear market and in the recovery year, which basically everybody's tired and they don't want to talk about crypto. Crypto is finished, blah, 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 all of these kind of stories that eventually never pan out to be true. I mean, can it go to zero? Sure. I mean, do I think all crypto will go to zero? No. Can it go to zero? Yes. So it's also important to be honest about these things and not come here, oh my God, no, there's no way, it's impossible. No, it can go to zero. So having that in mind is actually quite important. What I'm saying is that there's nothing here which is derailing the cycle. And in fact, there's not much difference between this cycle and the previous one and the previous one. So in that sense, we're still on time. It's just the most boring phase. I get it. I feel the same. It's boring, never moves, blah, blah, blah. Let's hope that by November, December, we will kick it up a notch, and never forget, every day closer to the halving, it's one day closer to the bull market. Now, what I want to keep seeing is ETFs being, for a price appreciation point of view, is to see new spot ETFs being filed in. I want to keep seeing the SEC losing lawsuit after lawsuit. I want to see Jim Cramer bearish on Bitcoin, because he was bearish the past week, which is good. That's the type of things we want. What else? We want some institutional money, some more tryouts with digital bonds. So what you want to see is crypto and blockchain taking over some of the legacy items of the financial world, like bond issuance and stocks eventually, because that's the point, right? We are here to replace the legacy finance systems. That means that we need to start doing it instead of the traditional way. Otherwise, we are not here to replace anything. We are just a little bubble that went up to about 3 trillion valuation at the top, and that is now simply just going down and down. So that's the point. You see, you need to actually start replacing what you see in the world. Same way that Bitcoin came to replace gold, you need Ethereum to actually start facilitating the issuance of bonds, etc., like we've been starting to see across multiple companies. Now, let's keep it real. They typically issue in the 500 to a billion range, and they're issuing 5, 10, 50 million on blockchain. So, in the great scheme of things, it's something small, but it's moving in the direction that we want. Now, the point is, when the bull market comes, what I'm saying right now will be accompanied by green candles, which is what everybody wants to see. The way that people think is like this: green candle, 10 reasons why this candle is green. Red candle, 10 reasons why this candle is red. And they don't realize that sometimes the foundation for the green candles is being laid today, so then the green candles can come. They don't see it. And by the time that they actually do something about it, the price is already here, and then the higher it goes, the more they buy. So, and then eventually it does something like this, and they get all in the red. I've seen this happening thousands of times. You probably have seen it as well. It has happened to me, by the way, so I'm not a perfect person on this, but for sure that you can relate to whatever I just said. So thank you very much, guys, and I'll catch you in the next one.